When oil prices skyrocket, so does ExxonMobil's stock. But when oil prices plunge, ExxonMobil's shares take a hit. Why? Because ExxonMobil's fortunes are tied directly to one of the most volatile markets on the planet, oil. Stick around to find out how oil prices can make or break ExxonMobil's stock performance. ExxonMobil, one of the largest oil and gas companies in the world. Whether they're drilling deep into the earth or refining petroleum, everything they do revolves around one thing: oil. And when oil prices move, ExxonMobil's stock follows. Today, we're taking a deep dive into how oil prices drive ExxonMobil's stock performance, why the company's future depends on the cost of crude, and how you can predict where the stock might go next by following the ups and downs of the oil market. Let's start with the basics. ExxonMobil is in the business of extracting, refining, and selling oil. So, it makes sense that when oil prices rise, ExxonMobil profits. More revenue from oil sales means higher profits, and higher profits mean a boost to the stock price. But the reverse is also true. When oil prices fall, ExxonMobil's revenue takes a hit. This can happen for a lot of reasons: global oversupply, reduced demand, or even political instability. When that happens, ExxonMobil's stock can slide along with it. In 2020, for example, oil prices collapsed due to the COVID-19 pandemic and reduced demand. ExxonMobil's stock plummeted by over 50%. That's how tightly ExxonMobil's performance is linked to oil prices. So, what makes oil prices swing so wildly? It all comes down to supply and demand. When demand is high and supply is tight, oil prices soar. This could happen due to booming economies, extreme weather, or geopolitical tensions. When this happens, ExxonMobil's profits can skyrocket. On the flip side, when there's too much oil on the market and not enough demand, like during a global recession, oil prices can collapse. And when that happens, ExxonMobil has to sell its oil at lower prices, eating into profits. But it's not just supply and demand that affects oil prices. Geopolitical events, wars, sanctions, and international trade deals also have a huge impact. For example, tensions in the Middle East often disrupt oil supplies, sending prices up. Every time there's news of an oil pipeline being targeted or a major producer cutting output, oil prices jump, and ExxonMobil's stock usually follows. On the other hand, when peace deals or new oil fields are discovered, supply increases, and oil prices drop. Investors in ExxonMobil know that global events can change the oil landscape overnight, which is why the stock can be so volatile. Now, here's where things get a little more complex. Oil prices aren't just determined by supply, demand, and geopolitics. They're also influenced by speculation. Oil futures allow investors to bet on what they think oil prices will be in the future. If traders believe oil prices will rise, they buy more, which drives up prices in the present. This speculation can cause massive swings in the price of oil, which in turn affects ExxonMobil's stock. Speculators can push prices higher or lower than the actual supply and demand would suggest. And while this can lead to big gains for ExxonMobil when prices rise, it can also lead to sharp losses when prices fall. ExxonMobil knows it can't control oil prices, but the company has strategies to protect itself from extreme price swings. One way ExxonMobil mitigates risk is by diversifying. Yes, oil is their bread and butter, but they're also heavily involved in natural gas, chemical production, and even renewable energy. By spreading out their investments, ExxonMobil can cushion the blow when oil prices drop. Another key strategy? Long-term contracts. ExxonMobil often secures deals with major buyers, locking in prices for the future. This helps stabilize revenue, even when the oil market gets rocky. So, why do oil prices matter so much for ExxonMobil's stock? It's simple. The price of oil directly affects how much money the company makes. When oil prices rise, ExxonMobil wins big. But when they fall, it's a tough road ahead for the stock. By keeping an eye on oil prices, geopolitical events, and market speculation, you can get a pretty good idea of where ExxonMobil's stock might be headed. And remember, in the world of energy, it's not just about today's price, but tomorrow's trends. Thanks for joining me on this deep dive into ExxonMobil and the oil market. If you found this helpful, don't forget to like, subscribe, and leave a comment with your thoughts. What other companies would you like to learn more about? Let me know, and I'll see you next time.